Good morning, friends. So, till yesterday, day before yesterday, we were discussing few concepts from chapter number 1, wherein we have seen who are the users of the financial statements and what is the origin of auditing and what is the definition of auditing. As I told you, the definition is most important, which says that auditing is an independent examination of financial information of any entity, whether profit oriented or not, irrespective of its size or legal form. When such an examination is conducted with a view to expressing an opinion thereon, which says that you have to be sincere, honest, straightforward, with good temper, and you should maintain all qualities of a good businessman. As a auditor, you should maintain all those qualities for examination of the financial information. And we also discussed whether this auditing is related to any other subjects or itself just I know the auditing subject. So we discussed that auditing, accounting, auditing and law, auditing behavioral sciences, auditing and statistical mathematics, auditing and production. In such a way, we said that just because you know the auditing, you can't do auditing. You should possess knowledge of some other subjects also, so that you will be able to complete your work properly. So there are relationship between this auditing and other subjects, and we also discussed objectives of auditing. There are two objectives. First one is you have to obtain reasonable assurance. What important? Reasonable assurance that financial statements are free from misstatements, and also you should express opinion that financial statements are prepared as per applicable financial reporting framework. Applicable financial reporting framework. Let us see the words reasonable assurance. That means it's not absolute, complete, perfect. It's not possible. Why it is not possible? Because of inherent limitations of audit. Audit also suffers from some inbuilt inherent limitations. That means some disadvantages. Say for example, the depreciation. Depreciation is based on estimation and also management's knowledge with relation to that particular asset, the lifetime, the scrap value and all. So it is very difficult to obtain sufficient appropriate audit evidence with respect to depreciation. When they are saying, sir, depreciation we calculated, these are our assumptions, so we have included this in the financial statement, please certify. Then there is an inherent limitation that since you didn't get the proper evidence for that, you have to depend upon the management's representation and certify the financial statements. So some sort of risk is there for the auditor. So we can't say that yes, this depreciation figure is 100% correct. It's very difficult to conclude that. That's why the objective says it is enough if you are able to obtain reasonable assurance. On what? Whether financial statements are free from material misstatements. So at least satisfy yourself that financial statements are free from frauds and errors. And also express your opinion. As I said, opinion has to be in formal form, written form. It's not that simply you give a thumb impression like this. Okay. And these financial statements should have been prepared as per applicable financial reporting framework. Say for example, in case of companies, you have prescribed formats. Formats in the sense the company law says that the financial statements of a company should include so and so points. So these are the applicable financial reporting framework. So for companies, how the financial statements are to be drawn were given in the Companies Act itself, and those are the guidelines for you. For you in the sense for the business organization, and you have to see whether business organization has followed that framework and prepared the financial statements or not. To that extent, you should obtain reasonable assurance satisfaction. Next, second objective is you have to give your report. As I told you, you have to give your report in the formal form, and the reports formats in case of companies, the reporting format companies had prescribed, and also institute has given the format also. We have to follow that format as a chartered accountant. And also we discussed scope of audit, what it includes and what it does not include. Simply, when you have taken up an engagement, you should be very clear in the area which you have to cover. Suppose you are asked to do only stock audit, then your scope is limited to stock verification. When you are asked to do only expenditure audit, then your scope is limited to so-called expenditure part. You need not go to revenue, you need not go to fixed assets. Of course, the expenditure is a revenue expenditure. Again, the limitation is, so again the area is limited to revenue expenditure. So, very careful while accepting professional engagements. What is your scope of work? Unnecessarily, if you provide assurance on the area which is not in your scope, then you will be in problem. So, be very careful about scope of work. And what it does not include, as we discussed, auditing is not an investigation. Auditor is not expected to so expert in all aspects. As I told you, in case of coal mines, suppose if you have to verify the closing stock or work in progress, it is very difficult for you to physically verify. As an auditor, you can't evaluate. In such cases, there is no alternative. I have to depend upon some expert opinion. And even for depending upon the expert opinion also, institute gives some guidelines. You have to follow certain steps to evaluate the work of that expert and then satisfy yourself that that expert's work is sufficient for me to give the report on financial statements. That is most important. It is not that simply say that, sir, actually the expert has given the report, he said that work in progress value is so and so crores, I simply certified. No. Your working papers, your documentation should speak that you have evaluated his work also as per the standards on auditing prescribed in this regard. There are such standards. Okay, evaluation of work of an expert. That's important. So, auditor is not expected to be an expert in all areas. Sometimes he may have to depend upon other opinions. And also auditing is not an investigation. So that's why it says scope does not include investigative part. Okay. Even your objective also says reasonable assurance. That means just like a reasonably minded, intelligent, commonsensical person evaluates a particular area, it is enough if you are able to do that. You are not expected to be an investigator or a CBCAD police officer. So this is what. Next we discussed inherent limitations of audit, most important question from examination point of view also. So based on nature of financial reporting and based on nature of audit procedures, and sometimes you have to depend upon just the information given by the management, and as auditing is not an investigation, and also sometimes the cost of obtaining an evidence for a particular financial information or the time that is required to obtain that information may not be in your hands. In such a case, you have to compromise somewhere. And even the future events you can't predict, because depreciation is a calculation based on the future estimated realizable value, future estimated lifetime. So since you can't predict the future, these are one of the limitations. So these are few inherent limitations because of which it is not possible for the auditor to obtain complete satisfaction over the financial information. Another point. Sir, my audit scope is just limited to verification of revenue expenditure. In such a case, still these inherent limitations will be there. My scope of audit is just revenue expenditure audit. That was the engagement which I got. So still these inherent limitations or disadvantages will be there. So can you tell me which inherent limitations out of this list will be there in audit of revenue expenditure? What is my question? Out of these inherent limitations, what will be the ones that will be applicable to Just audit of revenue expenditure. Revenue expenditure means, I have to go back to accounting definitions. Revenue expenditure means simply to say that appears in your profit loss account. Depreciation, revenue expenditure or capital expenditure. Simply, since it is appearing in your P&L, assume that you got engagement even for that also. Then obviously, first limitation is applicable. Nature of financial reporting. So depreciation lifetime. Okay. And you are given audit of revenue expenditure of Reliance Industries. Reliance Industries. So will you verify each and every entry, each and every voucher, each and every bill? Possible? No. So second point says nature of audit procedures, in which case definitely you will resort to sampling. When you resort to sampling, it is not possible for you to verify 100%. So in the area which you have not verified, suppose if any fraud, error exists, which is a material one, then inherent limitation. So in this way, when you are selecting a particular area, when there is a scope given by the management, then you have to see what type of inherent limitation may be applicable to this scope. In which case you have to be a bit professionally alert and gather sufficient appropriate audit evidence and do your procedures properly. Very, very careful. So I have given you two examples. Okay. So based on the scope also, you have to see whether these inherent limitations are applicable to that particular area or not. What are applicable and what are the serious ones out of these things. Careful. Okay. And also we discussed what is an engagement. Engagement means nothing but an agreement between you and your client to do a work. Sir, what type of a construction? No auditing. And what is this external audit engagements? Generally, it is believed that the opinion given by an external person to the organization is more reliable than the opinion given by a person who is internal to the organization. See, I am a chartered accountant, I am the employee of the company, I am certifying that the revenue expenditure of the company is good, proper. Everything is true and fair. So will the public believe it? No. You may say that, sir, I am a chartered accountant, I also followed the standards for auditing, guidance notes and everything. Okay, you can do lie detector also on me. Still, external opinion is more preferable than the internal assurance. So that's why people will prefer external audit. Okay. Next, what type of benefits we are having with respect to this audit? As we said, audit is a socially responsible work, and you are having a bit more responsible towards the users of the financial statement. It is your responsibility to upkeep the confidence of the users of the financial statements. So once you do an audit, generally people will believe that yes, these accounts are audited, good, then these are reliable, dependable. We can take decisions on the basis of this financial information because it is audited. So that is one advantage, and it acts as a moral check on employees. Once there is an audit in the company, obviously employees will be afraid of doing any mistakes. Next, and there are other advantages to the government, like for determining the tax liabilities. And in case of bankers and lenders, they will take these audited financial statements to provide loan facilities to the organizations. And also, audit, generally people believe that, sir, audit means finding the mistakes. Okay, we have to come out from this assumption. Audit is not finding the mistakes. Again, we have to go back to the objectives. Obtaining reasonable assurance that financial statements are free from misstatements and they are prepared as per the applicable financial reporting framework. Okay, see, finding The misstatements is one of the works in auditing. It is not the only work of the auditing. You have to remember this point, and you will be taken carried away in the examination questions, like in case of multiple choice questions. Okay, these type of questions. Okay, please be very careful. Sometimes audit is not just the evaluation of financial information. Audit is also evaluation of internal control system of that organization. Internal control system. What do you mean by internal control system? Simply to say, the disciplined way of functioning in that organization. Say for example, suppose the organization is having a policy, or it prepared a policy that every expenditure which is above 5,000 rupees is to be approved by the managing director. Every expenditure which is above 5,000 rupees is to be approved by the managing director. Below 5,000, there will be some other designations like chief financial officer or any manager operations. They can approve that expenditure. See, when they are having a policy that expenditure is to approved by the managing director, they should follow that policy. As an auditor, while doing this audit, you will see that whether this inter-control system with the policies which they have framed, they are following it or not. If they are not following, you will highlight in your report that this policy is not being followed by the employees. This is an alert to the management that employees are not following the policies. Sometimes even management may ignore these policies. See, at least the MD should ask why the expenditures are not coming for my approval, right? Without expenditure, you can't run the organization, right? When he is not getting any expenditure for his approval, then he should ask why the expenditures are not coming for my approval. Is my all expenditure below 5,000 rupees? That's impossible. At least your salary should be will be above 5,000 rupees. Sir, salaries also should go to the approval of the MD? Yes. How? See, the salary process runs like this. Every month end, the HR takes the attendances. Okay. Suppose the company is having a salary software. Based on these attendances, the salary statement will be prepared. Once the salary statement is prepared, it is first checked and verified by the HR head, and later on it goes to the accounts person. The account person also checks, do a second check, then both these things will be forwarded to the managing director for approval. Once he approves, then accounts people will release the salaries. So this is a process for the salary release. So at least the management should be able to ask why the expenditures are not coming for my approval. So these are the things which says that because of the audit you will enjoy some benefits, some advantages. So auditing is preferred. Next, audit is mandatory or voluntary. It is mandatory for few clients and few are not mandatory. Who appoints auditor? As we discussed, owners, and in case of government authorities, C and AG, and in case of tax inquiries, government may itself appoint the auditor. And also we discussed the qualities of auditor. I think this was the last discussion in the last class. So what qualities the auditor should possess? Tact, caution, firmness, good temper, integrity, independence, discretion, industry, judgment, ethical, patience, clear-headedness, reliability are some of the qualities. Simply, whatever the qualities that a good businessman should possess, a good auditor also should possess those qualities. Okay. Apart from this, knowledge on accounting, law, and other subjects also is required. Synchronon means required. Okay. So what are these qualities? Tact. What do you mean by tact? Tact means you should be cunning. No, tact means not cunning. Okay. See, there are certain situations where you have to act a bit intelligently. I will tell you one thing. There are certain expenditures in business organizations which employees will account and will forward to you for your verification. Employee says that, sir, this expenditure is approved by managing director. Agreed. even if the managing director approves, if that expenditure is having deficiencies with respect to the evidence, statutory compliances, still I will write in my report. Employee says that, sir, what's your problem? Management has approved that expenditure. What's your problem then? The approval is just for policy's sake, but there are certain other angles. See, every expenditure managing director can't verify because of his busy schedule. So you have to say tactfully, sir, agreed, management has approved it, but still there are deficiencies. Like you have not complied with the statute requirements with respect to this. As per income tax law, you cannot pay per day per person cash more than 10,000 rupees. But you have paid it. MD has approved it, but still there is a statutory non-compliance. So this is a question mark according to us. So this is how you have to communicate. So the tactfulness lies in how you properly communicate the required things. Next, caution. See, caution means what? I should have investigative mind. Should I look at everybody like with suspicious eyes? See, caution is nothing but just see, first if you evaluate the inter-control system of that organization, and if you understand how the accounting system is running over there, okay, if everything is fine, then you can be less cautious. If these are not well, you have to be more cautious, be alert. Next, firmness. Firmness means, in Hindi we say Ziddi. So firmness. So I don't want to use Telugu because there are some North Indian students. In Telugu we can say Monditana. So whatever mean, firmness. Be stubborn, okay, with respect to your works. Okay. And next, good temper. Don't be so angry. Maintain that emotional balance. Next, integrity. See, it is not, integrity means like purity of mind, your mindset, proper mindset. Next one, independence. Don't be biased. That means if the management says that, sir, I will give you 1 or 2 lakh rupees, please certify my P&L account as correct and don't verify certain expenditures. Okay. So please be independent in your approach. Don't get carried away by any other offers. Next, discretion and judgment are related. So you should be able to judge the things, decide the things whether correct or not. For this you require knowledge of the subjects. That's what I said. Unless you have the knowledge of accounting, you can't verify accounting information. Okay. Of course, accounting standards are to be, accounting principles are to be followed by the management. But to verify those things whether they are correct or not, you should also possess the knowledge of accounting standards. It's obvious. Next one, ethical. Sir, possible nowadays? Yes, possible. Otherwise, your certificate at risk. Okay. So, careful. So, be patient, have clear-headedness and reliability. See, reliability is both angles. That means you should rely the management, you should rely the experts' opinions, and also users of the financial statements should rely on your audit opinions. So you have to maintain all these qualities. So these are qualities of auditor. Important question. Yep. So this is a bit recapitulation of old class because I am seeing new faces today. So that's why I recapitulated all the class. From tomorrow onwards, we will continue the topics because every time we can't go back. So even though our last discussion was qualities of auditor, we have kept aside few discussions in between. That is first one, to whom the report is submitted by an auditor. See, simply, ultimately, the end point for your engagement is your report. At the end of your work, you have to submit your report to the person making the appointment. Person making the appointment. In case of companies, you have to give a report to the shareholders. In case of a partnership firm, you have to give the report to the partners. If it is a sole proprietary concern, sole proprietary head. and if it's a government, to the so-called government authority. In such a way, you have to provide your report to the person who is making the appointment. And in previous class, I put one question. Suppose if you are the first auditor, who is the person making your appointment? You are the first auditor, who is the person making your appointment in case of companies? If it is a company and you are the first auditor, who is the appointing person? First auditor. Board of the directors. Okay. But this sentence says you have to submit your report to the person making the appointment. But when you are a first auditor, still you submit your report to the shareholders of the company only. Okay. See, ultimately the sentence can be anything, but we have to keep in mind the objectives and users of the financial statements. Yeah. Most important discussion, assurance engagement. What is this word assurance? Of course, we heard about engagement. Engagement means a formal agreement between you and your client to do a work. And what is this assurance? What is the simple English meaning of this word assurance? Guarantee. Okay. I vouch, I certify, I say it as correct. But what type of assurance you should provide and you should obtain? Reasonable assurance, not absolute assurance. You should not forget the objective. Careful, because this is said by standards writing 200, which says that as an auditor you should obtain reasonable assurance. So suppose if your client says that, sir, you have to provide opinion on my financial information. Okay, I need an absolute assurance. But as you know, because of inherent limitations of audit, absolute assurance is not possible. So then you have to say, sir, absolute assurance is not possible. If you need absolute assurance, then it will take the color of the investigation, not auditing. So then you give me investigation work, then obviously I will provide you absolute assurance. Sorry. In which case, the procedures will be totally different from the auditing. It is an investigation. So let us see the definition: assurance engagement. Assurance engagement. So let us see the definition and underline the important words. One thing I want to make you clear. See, I suggest you to carry pen, pencils, color pencils, sticky notes and all these things. Okay, it is for your benefit only. Suppose when I am reading this point or explain a particular topic, suppose if you want to highlight any important words, you can use those color pencils and those implements, so that it will be easy for you to refer at the time of examination quickly. Okay. Sir, it's enough I maintain the pen or a pencil, then it's okay. But few people are fond of the color shadings and all that. Okay. Because you have two brains. One is left brain and right brain. Okay. This right brain remembers all the creative things. That's why few people will highlight with these color things and all, which they remember with the right brain. Okay. And a word which is highlighted with a color one, okay, will be remembered by this right brain more permanently than the left brain. So that's why people will prefer these creative words. Of course, as I told you, I will engage you all in one memory exercise. Then you will understand what is this right brain and left brain. Leave it. Assurance engagement means an engagement in which practitioner expresses conclusion, specific information, confident decisions, uses. These are the important words. Engagement is a work which is agreed between you and your client, and in this engagement you are going to express a conclusive opinion, So assurance engagement, in which you will express a conclusive opinion about a specific information due to which users are able to make confident decisions. So let us see the words engagement, some work that is agreed between you and your client, and what you are going to do at the end of this work, you are going to give your conclusion, opinion, view on that specific information. As I told you, if you take examples of audit of revenue expenditure, that is the specific information for you as per the scope of the work. Then you are going to give your conclusive opinion on that specific information, and based on your opinion, users will be able to make confident decisions. That is called assurance engagement. Simply to say, you are saying to the users of the financial statement that I have verified this information and these are my opinions on this, comments on this specific information. Suppose if you say that the expenditure which I have verified is very much clear and there are no any misstatements in it, in which case the users will believe that yes, since this professional has said that there is no misstatements in it, this expenditure is correct, let us take decision on the basis of his opinion. So since they are relying on your opinion, it is indirectly creating an obligation on you to accept it as an assurance. So you have to admit that you are assuring to those people who are the users of the financial statement that the specific information which I have verified and these are my comments and views on this. Suppose if you give a clean report on that specific area, okay, it's an assurance to the outsiders, the users of the financial statement, that specific information is true and fair. They will take in such a way. Later on you cannot say, sir, because of certain other works and times and other problems, I could not able to verify that specific information. That means, suppose later on if any mistake is found out in that specific area, you should be able to clearly explain, okay, that you did your work properly and this mistake which has come out is not my mistake, that I didn't properly done the audit procedures properly. So there are certain other reasons for these mistakes. That's why it says there are inherent limitations of audit, and also audit is not an investigation, and also you are not supposed to be expert in particular area. Say for example the coal mine where the work in progress figure is incorrect, in which case what you can say, because it is not possible for me to verify that work in progress in case of a coal mine or any big manufacturing industry, in which case I dependent upon the expert opinion, and with respect to the expert's work, as per my institute guidelines, I have prepared a checklist and I asked a few questions to that expert and he answered in this way. Based on these answers and also responses, whatever the audit process I have done, I am certifying this expenditure is correct. Suppose if the court says that any reasonably minded person or any equivalent chartered accountant like you does the same procedures, he also comes to the same conclusion which you came, then you are safe. If your lawyer, other lawyer is able to prove that, sorry, out of 4 or 5 audit procedures he did only 3. If you have done the 4 and 5 audit procedures, you could have found out that mistake and he didn't do that. So it is his professional failure, in which case you will be in trouble. So that's why you have to maintain your working papers, audit procedures, documentation, evaluation of the work of that expert properly as per the institute standards on auditing. Sir, what questions I have to put to that expert? There is a standard. It will give you all the questions what you have to put. And of course, it is also not conclusive list. So it is also an inclusive list. Okay, he will give you some questions. Based on this, you can evaluate the work of expert. And if you are having other knowledge, you can also put other questions. So that's why a bit of risk element runs along with your auditing work. So you have to be very, very careful. You should try to minimize that risks. So this you have to keep in mind. So that's why even though it is saying that it is an assurance engagement that you have to certify, guarantee, give confidence to the users that the specific information is true and fair, still because of inherent limitations, okay, it suffers some risks. So you have to be very, very careful and use your professional judgment. And what are the elements of this assurance engagement? Point number 1, Three-party relationship. In this work, you have three parties. Any questions? Yeah, please. Sorry? Yeah, we are coming to that. There is one discussion on it. I will show you first. And this is the topic. Okay. So what are the elements comprised an assurance engagement? First one is three-party relationship involving practitioner, that means auditor, a responsible party, and intended users. If you take the example of audit of financial information, see, you are the person who is going to verify that, and you are the practitioner. And a responsible party means the person or the party who is responsible for the maintenance of this financial information. If you take a business organization, the management is responsible for maintenance of that information. And intended users. Suppose if it is a company, who are the users? The shareholders and other stakeholders are the users. So there will be three people in this assurance engagement. First one is you, the person who is performing this, and another one is your client, and the other people are intended users. Let us see these people. Practitioner provides assurance related to historical information. Most important. Provides assurance, historical information. Whereas, this word is important, may provide assurance not related to historical financial information. Generally, people believe that audit means you are verifying the information which is already happened. Suppose if you are verifying the P&L account balance sheet, means these expenditures have already been incurred, the assets have been purchased, the liabilities were accepted. So all this is history. So you are certifying whatever that has happened in the past. So you are going to verify those informations and you are going to provide assurance to the users of the financial statements. Yes, that is a historical information. You are going to provide assurance on that information. Suppose if you are asked to verify not the historical information but my future financial information. Historical financial information can be possible on the basis of the bills, vouchers, entries and all that. And how future financial statements will be prepared? Those financial information is called projected financial information. So how you project this financial information? How can you expect that next year or the years after that next year you are going to earn this much of turnover? Based on my past performance, based on the market study. Suppose this is my first year of operation. Is it possible for me to prepare next 5 years financial statement? Yes, I can prepare based on my market study, my confidence levels. I can prepare future projected financial information. Assume one thing. Even in case of historical information, you suffer a lot of inherent limitations. You can imagine how much of disadvantage that will be there if you have to audit future financial information. In case of historical information, in case of turnover, you will have invoices. But in case of future financial information, in case of turnover, you will not have any invoices. Then how can you say that information that is there in future financial statements is correct? And what assurance I can give in this? So, these type of assurances suffer from some sort of risk, in which case you have to be extra careful. You have to ask the management on what assumptions and what basis you are saying that your turnover will be this in next 5 years. So if that assumptions are acceptable, reasonable, okay, then you should be able to provide your assurance. But still, these type of assurance engagements are called limited assurance. They will not provide high level of assurance from your end. That's not possible. From your end, you cannot give high level of confidence to the users because that information is not history. There are no evidences for it. Only assumptions are the basis for that information. Which information? Future information. In which case, it provides only a lower level of assurance. You have to keep this in mind. Okay. That's why before accepting any work, please understand the scope clearly. If you are confident and competent enough to evaluate that, then only please accept those engagements. Just for the sake of peace, don't accept such type of engagements, and also fool yourself. Be very, very careful. Okay. Next, responsible party. Responsible for what? Preparation of so-called subject matter. If it is financial information, then that is the subject matter. Intended users are decision makers, and who wants this assurance report from your end. Okay. In case of financial information, as we said, there are so many users and they are the intended users. Next point, an appropriate subject matter. Management simply can't say that, sir, please start auditing from tomorrow. Please start auditing from tomorrow. You have also written a letter to the management, from tomorrow onwards I am starting my audit. What type of audit? Is it audit of financial information? Is it audit of only expenditure? Is it a stock audit? So the subject matter has to be very, very elaborate and clear. So appropriate subject matter. So subject matter means information to be examined by practitioner. Financial information contained in financial statement while conducting audit of financial statement. This is an example. And next one is most important, suitable criteria like standards, guidance note, laws, rules and regulations. Suppose if it's a company audit, you are guided by Companies Act. If it is a tax audit, you have to follow income tax requirements. Okay. If it is simply a voluntary audit being asked by the management and you are conducting that voluntary audit, you should take from the management what are their expectations. Say for example, they say, sir, please provide assurance on expenditure. Then the scope is limited to expenditure part. So appropriate subject matter and suitable criteria. Most important, sufficient appropriate audit evidence. Obviously your engagement involves this. You have to obtain sufficient appropriate audit evidence for the subject matter. For the subject matter, you should obtain sufficient appropriate audit evidence. Say for example, you are auditing the expenditure called printing and stationery. Printing and stationery. What type of expenditure will be there in this head? Printing and stationery. What type of expenditure it will be there? Purchase of papers, pens, pencils, stapler machines, or any printing of bill books. All these things will come under printing and stationery. In which case, what will be the evidence for this? The bills, the invoices. And suppose you are a frequent buyer from one particular vendor of stationery. That means one vendor is frequently supplying to that company all the stationery items. In which case, generally there will be an agreement between the company and that vendor for supplying those material at a standard rate for 1 year or 6 months. Few companies will enter into one standard agreement with the vendors. Sir, I am going to purchase from you in bulk quantity for large volumes and values. Why don't you give some discount? And please maintain the discount for 6 months or 3 months. After 6 months or 3 months, we will again sit and discuss and revise the rates. In which case, this agreement is also one of the basis for your verification. It is not just because you have an expenditure, there is a bill for it. And if there is an agreement supporting to that bill, then you have to see whether the rates charged in this bill are as per that agreement or not, whether the discount which he has offered is appearing in the so-called bill or not. In such a way, unless you question, management will not disclose. So it is your professional knowledge. When you are evaluating expenditure, when you see so many bills for that, you have to ask the management, sir, I am seeing so many bills from this vendor. Do you have any agreement with him? Then they will say, sir, yes, sir, we have an agreement. So few things management will not disclose to you. So based on your knowledge, professional knowledge and judgment, you have to ask. Suppose some misstatement has been found out in this area, printing and stationery. Sorry. And you are called to the court. and you were called to the call to answer this. In which case, the lawyer said, sir, he verified that expenditure with reference to bills and invoices, but he didn't verify the agreement. There was strict violation with respect to that agreement. One shareholder has found out this and he made a case. He said that the auditor was not serious in his assurance engagements. Then we will be in trouble. So, we have to understand one thing, unless you ask few questions, management will not disclose the information. So, sir, how can I know those questions? Again, I am saying professional knowledge, experience and judgment. Okay. Or even management may say that, sir, even though the vendor is supplying so much quantity to me, but still we didn't enter any agreement with him. They said that, sir, we don't have any agreement with him. In which case, you have to take these things in writing from the management. In writing from the management. These are called management representations. Management representation, most important thing. Okay. After your qualification, when you go for an audit, simply management says that, sir, please come for audit from tomorrow onwards. Okay. You should not accept that engagement, and you have to ask the management, sir, please give a management representation letter. What it contains? As I told you, responsible party. Since you are the responsible party, please agree from your end that these are your responsibilities. That you maintain books of accounts properly, you follow the accounting standards properly, okay, and you complete all statutory compliances properly. You please give that assurance from your end to me. Okay. Another question. Sir, if the management says that they have followed everything, will you accept and give your opinion? Still, my procedures are my procedures. My first safeguard is, please take the representation from the management. And one of these sentences in that representation is, management has to say that they have disclosed to you all the information that is relevant to the financial information. This is one sentence. That means, if there is an agreement with respect to this type of expenditure, it is their responsibility to disclose this agreement to you. Suppose, if they maintain any register with respect to this expenditure, they have to disclose those registers to you. If it is a statute register, as an auditor, you should know that there will be a statute register which they have to disclose. In such case, you only have to ask. If the registers are not statutorily prescribed, they are maintaining internally. Unless they say that they are maintaining, you will not be able to know. Okay. So these are certain areas where you have to be very, very careful. Why I am stressing these many examples and this, since this is called an assurance engagement, because the users are asking a guarantee from your end with respect to that subject matter. They are not believing the management representation. So that's why you should obtain sufficient, appropriate audit evidence. Towards sufficient and appropriate. What is this sufficient and appropriate? Let us understand. Sufficiency, quantity, appropriate, quality. So evidence, sufficient, appropriate. Sufficiency means quantity, appropriate, quality. As the word itself says, quantity. Take same example of printing and stationery. See, how many evidences I should gather to say that this expenditure is correct. You take for example the last case where I said invoices, bills. Suppose if there is an agreement, then that agreement also. Suppose there is a policy that every stationery purchase order to the vendor, if it is above 10,000, should go for managing director's approval. And this policy is also one of the verification factor for you. So you have to obtain whether this policy is followed or not. And you should be able to say that whether the purchase orders which are behind these bills are approved by the management if the amount is more than 10,000. Then what is sufficiency? Understood? See, that means not just the bill or invoice. If there is an agreement, then the agreement. If there is a policy, then there is a policy. Suppose, for example, if any income tax provision is there with respect to this expenditure, then provision compliance is also one of the points the management has to follow, and you have to obtain evidence for compliance to that policy. Suppose they say that all stationery purchases are cash purchases. In case of cash purchases, as per income tax law, as you know, more than 10,000 rupees you can't pay cash. See, just we have taken one head of printing and stationery. Have you seen how many evidences we have gathered? One is the bill, next one is the agreement, next one is management's approval, another one is purchase order, another one is if all the stationeries are being purchased on cash, whether they are following income tax law or not. So based on the nature of that expenditure or the subject matter, you should use your professional knowledge and judgment and see what is sufficient to give assurance on that particular subject matter. Next, appropriate relates to the quality, and also we can say relevance. See, for verifying printing and stationery, if I give you the restaurant food bill, is it a relevant one? No. Suppose for verifying that printing and stationery, if I give you just the purchase order and no bills, then it is appropriate. Purchase order is an order to the vendor to supply the product. Invoice is the one which says that yes, this material has been supplied and accepted by the business organization as its expenditure. Then only you can pass an expenditure entry in your books of accounts. Just based on purchase order, you cannot pass an expenditure entry in books of accounts. So, if there is an expenditure entry, then the relevant audit evidence is the bill or invoice, not just the purchase order. Okay, so this is most important. So you have to understand with respect to the subject matter what is sufficient and what is appropriate. Sir, there are so many expenditures in business organization. You are taking one printing and stationery as an example. What about other expenditures? What type of evidences I should obtain for those type of expenditures? Don't worry. There are some other chapters we are having where there is one chapter called audit of items of financial statements. Audit of items of financial statements. There we will discuss all expenditure heads. For various types of expenditures, what are the evidences we should gather? We will discuss in that chapter. Okay. For example sake, I have taken one head. Sir, can you take one more head with respect to the sufficient appropriate evidence? You tell me. Your choice. Any other expenditure head? Sorry? Fixed asset. Yeah, fantastic. Purchase of a machinery. So she is asking, sir, you are saying since you said expenditure, I am taking capital expenditure. So from capital expenditure, suppose the expenditure is purchase of a machinery. To certify this purchase of machinery figure, expenditure figure as correct, what sufficient appropriate audit evidence I should gather? Now my question is to you only. Basic first evidence, what will be? You have seen an entry. What will be? Invoice. Invoice. Remember one thing, it's a practical point. If the organization is a disciplined organization having a good inter-control system, all capital expenditures will have a budget. All capital expenditures will have a budget and approval for that budget. So you have to see in case of capital expenditure whether this expenditure is supported by evidence or not, point number one. Another one is whether it is having any budget which is approved by the management. Whether this expenditure is within the budget or it is crossed the budget. Again, I am telling you, it depends upon the scope of work. The management says that, sir, you have to audit this expenditure and see whether the statutory compliances related to this expenditure are followed or not. That is your scope of work. In which case, you are not supposed to see whether it is approved by the budget or not. You have to see only the statutory compliances related to this expenditure. In case of fixed assets purchase, what can be the statutory provisions? It depends. Suppose if it is a company, okay, the accounting standards are applicable. You have to see whether accounting standard related to fixed assets has been followed by the company or not in accounting disclosures and all. And if there are income tax provisions with respect to this capital expenditure, you have to see whether it is followed or not. But management says that's our expenditure audit, which includes everything. In which case, I will ask whether this expenditure is supported by bill or not, and whether it is approved by the budget or not. Whether they are having a budget, it is approved or not. Next. Suppose in your policy you have written that capital expenditure requires board of directors approval. Any capital expenditure above 10,000 rupees or above 1 lakh rupees requires board of directors approval. This is my inter-control system, my policy. So then you have to gather evidence with respect to board of directors approval. How board of directors will provide approval? In WhatsApp group. Board meeting and company law completed. So how the board meeting decisions are finalized or brought to implementation? Simply through board resolution. Okay. So when you are verifying the capital expenditure, you are saying whether it is supported by bill or invoice and approved budget is there or not. And again, if the policy says that capital expenditure to be approved by the board of directors, whether the supporting resolution is available or not. Okay. Another. See, what is your scope of work? Audit of expenditure. Whether it involves verification of statutory compliances also. So, GST discussion completed? Has to happen. Fine. See, GST law says there is a word called input tax credit. Input tax credit. What is that? See, when there is a tax to be payable by you and we have already paid tax, okay, on some raw materials or the products which are used in your final product on which you have to pay the tax, you can set off that tax with the output tax. So that is called input tax credit. In case of fixed assets, see, this is a fixed asset to you, but the person who sold it, it is their goods. Okay, it is not fixed for him. So then he will charge GST. So can I take input tax credit for this fixed asset? There are rules in GST law based on which you can take. Now, my scope of work involves verification of statutory compliances for this capital expenditure also. Then I have to see whether GST law and the point related to input tax credit has been properly followed by this company with respect to accounting of this fixed asset. Suppose management says that, sir, we don't want to take any input credit and we want to completely capitalize that expenditure, then they can capitalize. See, GST law says one thing. Suppose if you are claiming depreciation, you can't claim input tax credit. If you want to forego the depreciation, then you take the input tax credit. Of course, there are certain conditions. I am not going deep into that. So, there are certain statutory compliances in GST law with respect to the capital expenditure. Then you have to see that also. Again, I am telling you, it depends upon the assurance engagement in the scope of the work you agreed with your client. Sir, you take for example in case of company. So then you tell me what is my scope of work. If you are a statutory auditor, whether all these things will come under your scope? Obviously, no excuse. Okay, because you are going to comment on true and fair view of the financial information, which involves everything. Sir, even compliance by the management of Factories Act also? Compliance by management with respect to Factories Act. That also as an auditor I have to see and comment. Suppose Factories Act says that in case of hazardous factories where some dangerous material is being manufactured, display of safety instructions with radium paint is essential. Display of safety instructions at appropriate places in the factory with radium paint. That means it should be visible even in the night is required. That is the Factories Act rule. management has not followed this. Is there any responsibility on you as a statutory auditor to report in your audit report? Is there any responsibility on you as a statutory auditor to report on this place? How? In what way I am concerned? I am certifying P&L account and balance sheet. Why should I comment on display of the safety instructions as per Factories Act? See, remember one thing. All the rivers flow into the ocean. All the rivers flow into the ocean. See, whatever may be the works that happen in any organization finally ends up in your P&L account and balance sheet. So now let us evaluate this case. What is this? Display of safety instructions in case of hazardous establishments as per Factories Act is a rule for the company which they have to follow. Suppose if they don't follow, what will be the implication as per Factories Act? Penalty. Penalty means it will in the form of money, during your verification you found out that they are not following this. Obviously there is a possibility of penalty in monetary terms, and is it necessary that they should make a provision for this? If they didn't do the provision, then comment. Okay. So how these type of things are to be reported in an audit report, that we will discuss in the audit report chapter, because there are certain paragraphs in the audit report where you have to mention about these type of points. Okay. So in such a way you have to see this connectivity with the true and fair view of the financial statements. So Factories Act is not there in your CA syllabus. So how can I obtain knowledge with respect to the Factories Act provisions and those provisions which are related to my scope of work, if my scope of work is a audit of financial information? Okay. See, if you students said that, sir, why you are going beyond the subject, why you are going to practical world? See, please understand, auditing, unless you relate yourself to the practical world, it is very difficult for you to understand. That's why we will take you to the real scenarios and outside world and connect to the subject points. Okay. It will take time, but this will register in your mind. So, Institute says that you have to bifurcate the compliances, statutory compliance, into two parts. One is the compliances which are having indirect impact on the financial information, and the compliances which are having direct impact on the financial information. In case of direct impact, no alternative, you should know those provisions. In case of indirect provisions which are having, in case of provisions which are having indirect impact on the financial statements, okay, so those are a bit risky areas. So that's why unless you don't have competence, knowledge, professional judgment, don't go to audit just because you are getting a big fees over there. Because these engagements are assurance engagements. You are saying that management is properly following everything. When they are not following certain principles and there is a penalties which are in crores and the management has not made a provision, obviously it is having an indirect impact on the financial information. So we have to be a bit careful in these type of areas. Okay, don't worry, sir. You come down to examination level. To qualify in CA examination, do I require all this knowledge? No. Okay. For understanding of this point, I am telling you all these examples. So if you come to the examination level, sir, evidence has to be sufficient, proper audit evidence. That's it. Sufficiency means quantity, appropriateness means quality. That's it. See, simply I say one word. If you want to become a chartered accountant, follow this matter. Reproduce this, just qualify. But if you want to be a chartered accountant, you should possess knowledge. Okay? You will become a chartered once you pass the examination. But if you want to be a chartered accountant forever, you should possess knowledge. Okay? Because I have seen few students, once they qualify the examination, they don't remember anything. They forget every provision. Of course, there are books available in the market. For income tax slabs, you can see in your phone or you can browse and you can say that these are the slabs and all that is accepted. But see this competitive world. So who is preferred nowadays? The person who is having the knowledge, that's it. So careful. So of course, this is beyond the subject. Next, written assurance report in appropriate form. See, what topic we are discussing? I think we are forgetting the head. Assurance engagement and elements of assurance engagement, where we said 3 parties will be there. There should be appropriate subject matter, and the subject matter is related to any statutory compliance, rules, regulations, policies, intercontrol system. Then the criteria, that means the conditions applicable to that subject matter, and sufficient appropriate audit evidence, and finally an report, a report from your end. This is the end point. So it is saying written report, most important. Okay. Simply you can't send an emoji icon in WhatsApp that said everything is fine. So written report containing conclusion. You can't keep the case open. Okay. Conveys assurance, what important? Assurance. So written report, which is the end point of your engagement, assurance engagement, which conveys your assurance on the so-called subject matter. So these are the elements of your assurance engagements. Important question. Now let us see audit versus review. The word's important. Audit, review. Let us see the difference between this audit and review. Review, word important, limited assurance engagement. Limited assurance engagement. That means the confidence or your guarantee with respect to review engagement is a bit lower level than the audit engagement. In case of audit, you provide a higher level of guarantee and assurance to the user of the financial statement that particular information is true and fair. But in case of review, you will not take that much responsibility and say that that information is true and fair. So this is a subtle difference between review and audit. So let us see. Lower level of assurance involves few procedures. However, both audit and review are related to financial statements based on historical information. See, you are going to audit the financial information, you are going to review the financial information. The subject matter is one and the same, but the procedures which you use in your audit, you may not use in your review. In review, you will resort to some very less strict audit procedures, and even sampling also you may not do that much seriously. So that's why it is called review, and audit is different from it because you will use more audit procedures and you will use statistical scientific sampling techniques, and you have to provide a bit of higher level assurance to the users of financial statements. See, generally in public, it's a practical point. Suppose if the management says that the accounts are reviewed by the auditor, the accounts are reviewed by so-called chartered accountant, people are under assumption that this is audited. People are under assumption that this is audited. Okay. So that's why you have to be very, very careful in giving the report. Suppose if you are reviewed it, then you have to use the word called, we have reviewed the financial information of the organization. When you have done the audit, you have to say that we have audited. Suppose you have given a review report and management has published it to the shareholders that this information is audited. Once you come across this type of wrong disclosure, then simply you have to raise a red flag to the management. Sir, this is not audited. Simply I verified your financial statements on overall basis, and I did some small calculations and small sampling techniques and all, and I reviewed it. Okay, so this you can't take it as an audit, because audit is totally a different approach. So careful. Let us see what is this. Reasonable assurance engagement means audit, and limited assurance engagement means review. Let us see the difference between these two. These two headings you can take difference between audit and review also. Okay, because the examples, number one, reasonable assurance provides higher level of guarantee, assurance, confidence, certification from your end, whereas limited assurance provides lower level of assurance. Reasonable assurance elaborate extensive audit procedures to obtain sufficient evidence. Limited assurance few procedures compared to, this word important, compared to. Say for example, if you take the same example of expenditure on fixtures, what she said. Okay, in case of review engagement, I will see only the bill. If you say it's an audit, I will go more deep into that. Even I will go for direct confirmation procedure from the vendor. I will write a letter to the vendor and will ask whether you have really sold this asset to this organization or not. But whereas I may not do this in my review engagement. So the opinion or assurance provided in a review engagement is not of that much higher level compared to the audit, because I just believed on the invoice. But whereas in case of audit, I have gone far beyond the borders of the walls of the organization which I am auditing. Even I wrote a letter to that fellow. So these are the differences between review and audit. Suppose if you limit your audit procedure to few procedures, then that's a review. And if you go for elaborate audit procedure, extensive audit procedures, even obtaining confirmation from the bankers, vendors, and you maintain sufficiency at high level, then that's an audit. And if you maintain that sufficiency qualification at a lower level, then that's a review engagement. Okay, sir, once I go into practical world after my qualification, your question. So what type of engagements I will get? What type of works I will get? It's a big list. First basic engagement which you know is certifying profit loss account and balance sheet audits. Okay. And you know, as a chartered accountant, you are asked to do review of the business operations. I will call you one day, sir, please just see my business organization's performance, all departments. Just please see and give your opinion or review. This is not audit. Okay. Every engagement is an assurance engagement, but it depends upon the level, whether it is higher level, lower level, or moderate level. Whatever the works you take up as an auditor is an assurance engagement only. Okay, but there are certain other examples. I will come to that. Max, you will get assurance engagements only. You are asked to give your signature on particular subject matter, which is an assurance from your end that this is correct or whatever. So in case of this review and audit, suppose if I ask you as a company, sir, please come to my business organization and please review how my operations are going on. Or I say that, sir, please review my purchase department works. In which case I will go to purchase department, I will see how they are working, and I will see whether they are properly following the company's inter-control system policies or not. If there are no policies at all, then I will say that your purchase process is going like this and there is no proper policies for this. And if you have proper policies, this department can function properly well. Then this is not audit. This is a bit review. And this is also an assurance, but with respect to limited level. I said that present process is going like this. Even he is asking me to say that one only. What is my present process? Then I said your present process is going like this. When I say that your present process is going like this, it is one sort of assurance only from my end. What I am saying, your present process is going in a 3 to 4 steps process for purchase of any item. That means I have seen and I have given my comment on it. But assurance level, it's only a limited assurance level, not an audit. So the words audit and review sometimes being misunderstood, but as an auditor we have to be very clear with respect to these words. Audit is not review, review is not audit. Okay, careful. Audit reasonable conclusions on the basis of sufficient evidence, and limited involves obtaining sufficient appropriate evidence to draw limited conclusions. As I said, in review engagement you will not do elaborate audit procedures. You will resort only few audit procedures where your assurance will be limited, lower level. Sir, you take for example users of the financial statements. Suppose if I say I reviewed the accounts, I audited the accounts, which one they will prefer and they will accept? Audit, obviously. So answer is from your end only. You only gave the answer. So that's why users of the financial statements prefer if the financial statements are audited than reviewed. So this is one difference between audit and review. Another important point, besides reasonable assurance agreements and limited, there is another kind of assurance, there is another kind of work which is lying between these two, which is an example of prospective financial information, not to historical. See, you can review whatever happened in past, you can audit whatever happened in past. Suppose if I was asked to say my view or comment on future information, whether it is a review or an audit. Review or audit. That's why we said, of course you can use the words audit or review. Okay, you may say that it is a review, but you have to keep in mind whether it is reasonable assurance or limited assurance. Okay, so while giving your report, in case of review, you have to choose the language properly. You have to choose the language properly. Clearly you have to say that this engagement is a review engagement and we did only limited audit procedures, and this cannot be taken as an audit report. This review report cannot be taken as a audit report. So this way we have to express our responsibilities. We have to disclaim. We have to give disclaimer that this is not audit, this is only a review. Even if there is a court case, there are some misstatements were there, then I can say that sir, this is not an audit, this is only a limited assurance engagement, it's a review where I will proceed to do only few audit procedures. If you give me audit, I will do audit procedures where these type of misstatements will come up. Okay, I believed in the expenditure which is recorded in the books of accounts and I seen the invoice. I didn't wrote any letter to the vendor, okay, that this expenditure is correct or not, you certify. That's an audit procedure. I have not used it because this is a simple review they have asked me. So in such a way you have to demonstrate, okay, you have to explain before the court of law or the users that the assurance levels are limited in case of review, and if it audit, that will be higher level. So through your working papers, your report, you should be very clear in your language. This is what I want to tell you. So in case of future financial information, you have to be very careful in your language. Of course, it can be a review, but you have to be very careful in choosing the language. Yes, please. Sorry? Cost. One thing. Time. Another thing. Mandatory nature, voluntary nature we discussed. So his question is, why the business organization prefer these reviews than audit? See, if it is a company, audit is mandatory because every company has to appoint auditor. If mine is a partnership firm, then I will say that sir, everything is fine. Expenditure I am taking care of, turnover I am taking care of. But as far as the fixed assets is concerned, I am having a little bit doubt on the proper functionality. That means the department's functionality. So just you see that and give me your opinion. Then it is your responsibility. Now you have to ask, sir, you want me to do general review or you want me to do a full scope audit? So the question has to come from your end, whether it is a simple review or audit. Suppose if you say, sir, you go deep into that area, please give me a perfect opinion on this. Then you will say, sir, that will be an audit opinion and I will take this much of time and this much of fees. Suppose if you say simply, you go to the department and do some overall verifications and I'll give me some opinion, then that's called a review. And for that, this is the time and this is the cost. So audit is not mandatory for you, and the management needs opinion on that particular department immediately. It is not willing to wait for that much time. And the cost you said, of course, even though it may be reasonable for you, may not be reasonable for the management. Then they said, sir, just do an overall verification. Give me that information. Overall is fine for me. So it depends upon the engagement again. Suppose you got an engagement from the government's end to review the particular organization's so-called subject matter. Then what do you call this? Audit or review? The government has used this word. Please review the operations of the so-called business organization and provide your opinion to the Government of India or Department of Income Tax. Then what type of engagement it is? Again, I am telling you, assurance. Don't get carried away by the word audit or review. See what much of assurance you have to provide with respect to this. That's the most important. That's why you have to sit with them and discuss and clear on this assurance. Suppose if they said, sir, we need an reasonable assurance, then in which case it's a audit. They'll say that, sir, it's enough if you do a overall verification, then it's a limited assurance engagement. That's called review. But remember, government will never ask you to do a limited assurance engagement. They want a deep study. That's why you have been engaged. Otherwise, I could have engaged my department employee itself to go to that organization and verify and come back. Why I am taking an expert opinion? Why I am giving to an external audit? So it depends upon the engagement, the scope of work, the depth of verification, and the expectations of the person who is making the appointment. So you have to clearly judge the assurance levels. Based on that one, you have to say there is an audit, review, or a moderate level. So that's what. So that's how we have to understand. Another example to tell you about your question. These reviews. Sometimes managements or business organizations call you to do overall verification. Health checkup we call it. In practical world they call it as health checkup. Recently we have done for one company GST health checkup. GST health checkup. What is that? From this year onwards, that organization has asked me to take care of GST compliances. Then I said, sir, you have asked me to verify GST compliances from this financial year onwards or from the date of my appointment letter. Total financial year or from the date of my appointment letter. They said that financial year. Then I said okay. But their their chief financial officer has said that the management, sir, wait. What did he said? He is asking whether he has to review or verify the GST compliance with respect to the date of appointment or for this financial year. For this financial information, last April to next March. From the date of appointment letter means from today onwards till this March. No. I need one more thing. What is that? Since my GST audit for the last financial is not completed, I want him to verify last financial year also and give his opinion. And review my last year complaints. That's a historical information. All the GST complaints has happened. Even income tax rate has also filed. Now they are asking, please review and give your comment whether we have followed the GST compliances in the last financial year properly or not. Okay. So these type of works will come to you. Then you have to understand. Again, we have to ask, sir, okay, sir, now you are asking me to review last financial year. So now you tell me what much of review you need. Limited or elaborated one. You want me to go deep into that? He said, go deep into that one. Every aspect you verify. Okay. So then, whether it is an audit or review. No, you are getting carried away. Again, I am telling you, assurance, reasonable assurance or limited assurance. So based on these things, you have to choose the language in the report. Okay. So if they say that please verify and review our GST compliances, okay, even though they have used the word review, it is not review. Please understand, you have to take from them what much of verification they need. Suppose if they say that sir, we need an absolute assurance in the GST compliances, then it's a bit far beyond the audit work. Don't say it's an investigation. Sir, you said yesterday absolute assurance investigation. No, I'm not saying that investigation, because these are GST compliances. There is no requirement of investigation into it. Okay. So you have to understand the level of assurance or confidence they are asking from my end. If they are asking for absolute, then I don't have any alternative but to resort to the say serious audit techniques. So this is a bit difference. Okay. So you have to understand difference between historical financial information and prospective financial information. This we were discussing since last topics. Okay. Give a minute. Can you answer this question? Let me try. So let us see difference between historical financial information and prospective financial information. So historical financial information speaks about the transactions, events that has happened in the past periods, and whereas prospective financial information speaks about the events and transactions that are going to be in future, the possible actions. We can't say transactions, we can say that future events and possible actions of the future. Another second paragraph is most important. It says relates to future events and assumptions. In case of historical financial information, suppose if you are saying my turnover is 2 crores, then there are evidences for it. You have invoices, bills, GST returns for this. In case of prospective information, if you say my turnover is 5 crores, there won't be any evidences, there will be only assumptions. What do you mean by an assumption? And what is the difference between assumption and presumption? English. Careful. Sir, do I require knowledge of English to become a chartered accountant? Sir, in CA subject, English is there? Foundation. So that's why it's called foundation. Okay. So knowledge of English is important. Okay. When you are choosing words, be very, very careful. That's why Institute has said that don't choose your words. We will give you a format of the audit report. Okay, respectfully, please follow that. Because if I give option to you, we know how much of beautiful English you will use. Okay, that's why. So jokes apart. So assumption. In case of future financial information, it is not possible for you to gather that much sufficient appropriate audit evidence which you will see in historical information. So in case of future information, you will have facts and assumptions. So therefore, you have to provide a report, most important, that nothing has come to practice attention that assumptions do not provide a reasonable basis for projection. Sir, what is this? Let us understand. You have to say that I have not seen anything while reviewing or verifying this future information that these assumptions are incorrect. That means you have to say in your report, as far as the procedures which I have used, I have not seen anything which says that these assumptions are not having any proper base. That means from one angle, you are giving some sort of assurance to the persons who are going to see this future information that the assumptions which the management has used in preparing this information is correct, true and fair. Sir, where I am giving all this? You are saying this is future information and you are saying this is based on assumptions and you are making me to responsible to these people? Understood? You are making the practitioner responsible to the users of this prospective information. And this information is based on assumptions. Sir, how can you make me responsible? You make management responsible. Why you are making me responsible? Saying that the assumptions used by the management is correct. Why you are making me responsible? Simple answer, because you accepted this engagement. Because you came forward that you will review this financial information and that you will provide your opinion. See, without saying anything, who will give you the fees? And without saying anything, how can you say that I have verified everything? You have to give some report, right? You have to give some conclusion, some opinion on this information when you accept this. See, that's the end point of your engagement. As I told you, report is the end point of your engagement. So in the report, you have to mention this. What is the sentence? Nothing has come to my attention to say that these assumptions are improper. You have to say this sentence. Sir, you are saying assumptions. How can I say that these assumptions are correct? So what procedures I have to use to reach to this conclusion to say that the assumptions are correct? Say for example, turnover. The management saying that financial year 23-24 is running now. For financial 23-24, 5 crores. 24-25, 10 crores. Another year, 15 crores. In such a way, they have given the information. Now they are asking you to comment on this. And they are saying, the comments which you are going to give, I am going to submit at bank. This is what the banker has asked me. Now, it is your scope of work. Will you accept it or not? It's up to you whether you accept it or not. Once you accept, then you have to take the responsibility with respect to report giving. Okay, that's why when you are certifying prospective financial information, you have only few things to verify. Few things in the sense, few things to check. That means assumptions. So you have to say that the assumptions are correct or not. So in case of turnover, how can I say that assumptions are correct? And because you are asking me to write that assumptions are proper. But how? For this, you require some sort of knowledge. One is your professional experience and knowledge of that industry first. Suppose if I am saying, sir, mine is a startup and now the month is November, and for this financial year ending, I am going to earn 5 crores. You are saying yours is a startup. Okay. And you are in November. Till that there is no turnover. At the end of this year, you are saying 5 crores. How it is possible? They said that, sir, okay, since you asked how it is possible, see, these are the agreements. I am a software company. I have entered into agreements with Tech Mahindra, Infosys, TCS. In such a way, I have some outsourced works, which I have agreed that I will deliver these works by the end of March. And the contract amount is, all to put together all these agreements, 5 crores. Even though my turnover is 0 as on date, as per the agreements, I have to deliver the works by March 31st. For this, they are going to pay me 5 crores. If I don't deliver this work by 31st March, and I have to pay 3 times this turnover. That is the penalty clause. So, now to verify first year financial turnover of 5 crores, I have some basis. So, that's why I mentioned my turnover will be 5 crores, because otherwise they will cut off my head. There are penalty clauses. At least they say that 50% of the contract amount you have to reimburse us, because we have given this contract to you disregarding everyone. So it's a matter of time, boss. So we are believing you that you will deliver this product and give this, and if you are unable to provide, okay, there is no loss for you. But we are a big company. We have a time value of money. We can't wait for that much period. If you say, sir, I am unable to do, then I need a penalty from you for wasting my time. Then now, there is a knife on your head or the neck that you have to complete this engagement as per this agreement, for which you will get 5 crores. So based on these agreements, okay, I have projected my turnover for this financial year as 5 crores. Is it enough for you? Yeah, good. That's what I need. No, this is the qualification of an auditor. You are saying that? No. Yeah. What other questions you will put? Fantastic question. What is your work in progress as on date? So my question is, you are a chartered accountant. How would you understand my work in progress? Because I am a software company. I will show you all my programming code. Will you understand that this work is completed 30%, 50% or how? Sorry? Again, expert opinion. Don't say every time expert opinion. Expert opinions are sometimes costly. CS up. Okay. I am accepting your expert opinion. Which expert you will engage? You in that field. Okay. The management said, sir, I know one software engineer. Can I bring him? No. So you will bring? See, when you are not accepting their person, then you have to, they will say, then they will say sir, okay sir, आप बोलो. So how to proceed on this? Intent decision, leave that engagement. See, I'm telling you again and again, competence, knowledge, efficiency to do that. Don't get carried away the fees. Sir, I have to pay my house rent, so I want to accept this. No. If anything goes wrong, your certificate will be torn into pieces. And institute will ask you to paste it again. So careful, unless you have the competence to do that engagement, don't accept the step of engagements. Of course, this is a practical point. Suppose if you give that engagement to me, Vishwanath Chartered Accountant. Yes, I know few people who can verify these areas and say the percentage of work in progress. Definitely I will bring, but the management has to accept the cost. Suppose if I say that, sir, to review this one, I need expert opinion, and the expert which you are trying to bring is okay for me, or if you ask me to bring my expert, I will bring. Management said that, sir, we will bring our person. Then in such a case, if the management says that, sir, he is my expert, he will give you the percentage of work in progress, as you said, on the basis of the work I have done as on date, you have to go by his opinion. Then institute has given standards on auditing for this, using the work of management expert. In such a case, if you are able to follow the guidelines prescribed in that standard and maintain your working papers, then you are safe. Okay, so this is how you have to complete the engagements. So that's why in case of prospective information, a bit of risk is involved, because those figures are based on assumptions. Sir, you said turnover. What about expenditure? See, projected information consists of both income and expenditure. So what about expenditure? Sorry? This is my first year of operations. Again, we have to see the assumptions. Okay. Suppose we are saying salaries basis. Suppose we are saying office expenses basis, rent basis. Okay. So such a way we have to see the assumptions correctness. Okay. Of course, since we are running out of time, so we'll leave the discussion at this level. So what we are discussing, difference between historical information and prospective financial information. Okay, since we have reached to the last minute, so we'll stop here. We'll continue the discussion tomorrow. Okay, thank you very much.